Hello and welcome to Young Turks, India's longest running show on startups and entrepreneurship. I'm Shireen Bhan. This week we continue to focus on accelerators and the co-working space. On the show today we tell you the story of India's first homegrown co-working space, 91SpringBoard, which started operations in 2013 and today has expanded to 9 major cities with 21 hubs. We'll also meet a couple of startups that have sprung up at 91SpringBoard and received funding from their accelerator program. Parkwheels, a Gurgaon-based parking automation startup, and Grow, a wealth management platform focused on millennials.
So about 6 odd years ago is when everything started. I had just sold my previous startup to make my trip. And after that had started to dabble in the idea of working with entrepreneurs and helping them grow. Both Pranay and Anand I have known for over 25 years. We were in school together, and an accelerator was the format that was emerging as the most exciting format.
Okay.
Pranay had a lot of experience running an accelerator in India at IIM Ahmedabad, and Anand had worked in startups in the US.
Okay.
So he had operating experience, he had investing experience, and I just talked a lot.
So why did you think startups needed handholding?
I had 5 startups at this point,
Okay.
all learning experiences and in a variety of fields. So had experience building co-founding teams, raising capital, finding your first few customers, learning digital marketing, all sorts of things, right? And I felt other folks I was speaking to, they were asking me the same questions over and over, and I felt, hey, I'd done this a couple of times before. Perhaps I can help them avoid the same pitfalls and help them along their journey. And can I do this and make a living for myself? That was what I was after. Then turns out I found a couple of guys who were smarter than I who could help along the journey.
Okay.
And we took it from there.
What really resonated with me was, the approach we were taking. Little things like, how do you get your company registered? Right? 5 years ago, that was today it's a trivial question, but 5 years ago it wasn't. And that's where something where, like the guy sitting next to me who started his company 6 months ago is probably better placed and to help me out with that, and quickly.
Correct.
Right? So a lot of the analogies we were using, and I had spent time in Silicon Valley, were around having an ecosystem or a peer support group.
So when we started, as Varun was saying, we didn't start with co-working. Actually, we started with a thought of we'll also put an accelerator in probably a similar manner. But there was this inherent thought of let's do it at scale. And that's where once we set it up and we started running it, we realized that a lot of people are coming and really the peer network is working very well. And that is something which is scalable. So we discovered co-working as we went.
Discovered co-working.
I'll give the real story. So that didn't happen. What really happened was we wanted to run an accelerator. We wanted capital. We went to raise money from Europe, from the US. Nobody gave us any money.
Okay.
Right? But we were stuck with our first space. So we had a space. We had some smart people that could help, and we had no money. So we said, do you want to come and work here? You can help each other. We'll try to help you, and you will grow. But we have no money for you. And people still came. So we said, oh, this can work too. And that's how it really happened.
Okay. So why did people not want to give you money though in that time frame? So this is 2012, 13. Well, they didn't get the money at that point of time, but the trio did manage to attract a seasoned corporate leader, Deepak Sharma, to join them.
We were not looking at it as a real estate business, but to us, co-working was a services business where it was a B2C, it was B2B, and it was B2B2C. So dramatically changes the way you look at your vision, the way you look at who your clients are, the way you look at what your value proposition is going to be. I remember we went to meet with Adam Newman, who's the founder of WeWork in New York. And it was really inspiring as to what he had done. And when we came out of that meeting, it actually gave us much more confidence and resolve that we could build this business in India.
One of the things right from the very beginning we've been focused on here is to create a heterogeneous group, right? We're not just saying all tech startups that are 2 years out of college, you come here. we've said startups come, SMEs come, freelancers come, and more recently even corporates are part of the journey. So what corporates really enjoy here is they have a number of SMEs and freelancers that they can work with and they can partner with. Some of their senior folks even actually enjoy being mentors to some of the junior folks. Freelancers like to come in because this is where they find business, they find their customers. SMEs love it here because being a small company, they can get the big company experience, right? They get the larger cafe, the larger conference room, the professional grade internet, a lot of these sorts of things, right? So they can sort of punch above their weight class, right? And the startups, well, the startups can really not afford any other office. They either have to be at home in their pajamas or they need to come into a place like ours where they can pay month on month on month. So they enjoy it for a lot of that flexibility. But once they're here, we've heard of stories right from finding capital, to finding information, to building their teams, to merging with other organizations. All instances we've heard of, and there's even more permutations to come than we can imagine.
So let's take a look at how this space in Delhi's Nehru Place, a prime commercial district, is being used by startups and SMEs alike.
We are a data-driven consulting company in the development consulting space. It was extremely important for us to locate our first big office in Delhi. So we wanted to be in a plug-and-play place without the hassles of actually running an office. Even our Washington office is similarly spec'd. And we're currently 6 people. We are going on to becoming 7 in the next 1 month, and all in a span of 3 months. So it gives us the brilliant option of scaling up and down.
When I started off my journey at Simply Learn, when I landed up in Delhi, which is my home territory, I started off working from home. There's no appropriate infrastructure which gives you feeling of working in an office space, and the kind of events that they organize on weekly basis really adds value. So those are a couple of learnings that you get as an advantage working out of a co-working space as compared to working out of your own office space or from home.
Across its 21 hubs, the team puts together 200 events every month for community building. Today, startups and SMEs make up 70% of 91SpringBoard's member base. Let's take a look at the story of one such Bengaluru-based startup, Grow. It was launched in 2017 by 4 FLIPKART employees. Grow is an investment management platform that focuses on millennials. So if you've been using the cookie jar approach and are now looking to formalize your equity, this startup could offer you a 101. Take a look.
Bengaluru-based Grow has one simple mission: make investing simple for the next 100 million first-time investors and enable them to grow their wealth in a seamless and transparent manner as they transition from one phase of life to another. The startup is the brainchild of 4 former FLIPKART employees, Lalit Keshre, Harsh Jain, Neeraj Singh and Ishan Bansal, who decided to call it quits when they realized that millennials, much like themselves, want to grow their money but don't know where and how to get started.
We started brainstorming this idea much earlier before we quit. But when I was quitting, I had to buy this insurance policy, and it was just so complicated for me. In the end, I just asked one of my neighbors, a friendly neighbor, and he recommended me something. And that's all. Then I went ahead and bought it. And if I recall, like many years back when I was in college, when I started investing in stocks, that was how I was introduced to the world of stocks. One of my friends who taught me what stock market is and how you should invest and so on. So that was the fundamental realization, that most of the people who start investing is based on social recommendations when they are taught by their peer groups.
And this insight is at the core of Grow's current product. The team decided to cut down the frills, simplify the user interface, and most importantly, enable first-time users to take informed decisions. So instead of telling them what to buy, the platform focuses on educating users via its experts and communities, thus helping users decide for themselves where they want to put their money.
The way they are used to shopping online or booking cabs online, so the consumer experiences across multiple sectors have changed drastically, while financial services is still very old school, and our fundamental premise is that we will change that.
Before even incorporating the company, we created a WhatsApp group with some 50-60 people, and we started discussing about investments. So what we've learned is a lot of people are having a lot of questions which they're not finding on the, in the way that they want answers to, and they're not going to the traditional way, they're just calling a bank agent or an advisor and getting those answers. So this generation has become much DIY. They go online, they spend a lot of their time on WhatsApp, on YouTube, on Quora, on Google, these platforms, and that's where we went, and that's where we got close to these people. We got our first initial organic growth coming from these channels.
So we actually don't do any kind of robo-advisory or any kind of advice. People can discuss about these products, they can ask questions, and these questions are answered either by users who have already invested on our platform and learned about these products, or by experts. And once users are informed, then they make the decision. Users typically are already used to looking at their Instagram feeds or consuming content on their social platforms. So similarly, we have tried to kind of create the similar experience for them.
And buying into this vision early on was Silicon Valley's iconic startup accelerator, Y Combinator. Today, Grow's investor portfolio consists of Insignia Ventures, Lightbridge, Kairos Fund and CureFit co-founders Mukesh Bansal and Ankit Nagori. But Grow is treading choppy competitive waters, with bigger players like Zerodha launching a direct mutual fund investment platform Coin, and Paytm Money launching its exclusive mutual fund investment app earlier this year. So far, Grow is a free platform, but the team plans over time to start charging small fees for premium services. With 500,000 registered users, the founders claim that they've been growing 50% month on month since the launch of their website and app in May 2017.
Mutual funds was just a starting point for us. It's like books of e-commerce, where it's a structured product, it's easy to communicate, people can easily buy. But our long-term vision is to be one-place solution for all finance products. We'll soon be launching next set of products. There'll be not insurance yet, because insurance will come a little later, but we'll still focus on the investing products. And as the customer's journey goes, user comes, they start with one set and then gradually they mature to the new products. So that's how we will keep launching and adding more products to the catalog.